The choice of when to scale is such a common failure point for startups. Great ideas that go sour because of this simple miscalculation. This term product market fit has been around, 20 years? What does it mean?
When my product has found customers?
I think that's where it's really broken.
P% of people do e-event every T time.
Slack's is more than 75% of customers send 2,000 team messages every month. So if we have that, are we ready to scale?
Yeah.
No.
So we talk all the time about how to scale the different sales motions, teams, go to market, all of those pieces, but we don't always talk about when you should do that.
Great question, Matthew. So funny story, when I did leave HubSpot shortly after the IPO over 10 years ago, it gave me a lot of time in my professional schedule to continue to pursue my addiction to startups. This time less as a full-time operator, more as like angel investor, board member, advisor. So I basically picked one a quarter to spend at least a day a week with. And so I did that with like 20 companies over a couple of years. And that's when I realized how important your question is, Matt, is I just kept reflecting, like, why did that one go public and why did that one go bankrupt? And it was like when they chose to scale revenue. And I was shocked at like how non-data driven, amateur those decisions were being driven. Do you know any guesses like what they would do?
My guess is honestly that it's scale your revenue as soon as you can.
That was probably the answer close to 25 years ago. It's not bad thinking. Do you want predictable, lasting revenue growth? HubSpot and I built the Science of Scaling database, $40 billion worth of real-world playbooks. Skip the theory, get actionable strategies, and implement them today. Well, click the link, or we're trying something new. Scan here. Okay, back to the video. I guess like most people say, you'll scale when you have product market fit. This term product market fit has been around, 20 years? What does it mean?
When my product has found customers?
Yeah, they will. They'll either say a certain customer amount, a certain revenue. I have $1 million in revenue. I have 20 customers, or I have 3 beta customers, right? And I think that's where it's really broken. I just don't think product market fit has to do with customer acquisition and revenue acquisition. Like great sales teams can sell ice to Eskimos. It doesn't mean Eskimos need ice. Like you have market message fit, but product message fit has to do with like, is your product successful? Here's a company that's really good at generating customer success for the customer with the product. How would you measure that?
Like reviews, G2 reviews. I mean, I guess like retention.
Yes.
Probably as well.
Right. So all those answers are correct. I'd say like in the world of software where a lot of our audience is, it's retention. And so like in software subscription, that's easy. Like someone bought your product and then retention is basically like they use your product and decide to rebuy your product. It needs to be rooted in customer success. So that would be my first answer is you are ready to scale when you have product market fit and you measure your product market fit by customer success with it, which is retention. Now the problem is like, that's a lagging indicator. So that's why we devised the concept of a leading indicator of retention. What can we see or observe with a customer in the first, say, month with our product that if we observe it, they'll be with us forever, strong retention. And if we don't observe it, they're probably going to cancel. And that's what we have to associate our entire initial North Star around. It's like, okay, great. You signed up 7 customers, and if we see that in the next 30 days, all of them have it, then it's a very good, strong view on product market fit. Now, there is no universal answer on what that is. It's customized to the business. Now, I'll give you a little bit of guidance as a framework. You can say it's P% of customers do e-event every T time. Slack's is more than 75% of customers send 2,000 team messages every month. Okay, so that's awesome. One founder is like, okay, we have product market fit when we have $1 million in revenue. Same founders like, we have product market fit when 70% of customers send 2,000 team messages every 30 days. What a better foundation to build a business off of, to start thinking about scale. So what was HubSpot's?
HubSpot's is 80% of customers send 5 emails once a month.
That'd be good for the email product. All right, the HubSpot story is pretty cool. I think it was around 2011-ish. I think we had like 10 million in revenue at the time, maybe 1,000 customers, I don't know. And we had so much data, we were at a much bigger advantage than most entrepreneurs to figure out this product market fit, this lead indicator retention. So we literally had a data science team analyze like 50 permutations. Like, was it like the number of emails you sent? Was it the logins? Was it the users? Turned out that it was the number of features in the platform you used. If you used 5 or more features in the platform every month, then that was our lead indicator retention. We wanted 80% of our customers to use 5 or more features every month.
Wow.
And what was cool about it is it illustrates how there's an attachment of that definition to your unique differentiation. Because you have to remember, HubSpot at the time was the all-in-one platform. You could either string together Hootsuite plus MailChimp plus WordPress plus, Salesforce plus Marketo into this thing, or you could just buy HubSpot and have all in one. So that was the deficiency, like number of email sends wouldn't be attached to our unique differentiation. It was the breadth of the product usage that made it more valuable. That's when you are ready to scale. You are ready to scale when you have product market fit.
Yes, if
Yes.
P% of people
Yeah.
do e-event
Yeah. Every tea time.
every tea time.
Exactly. So if we have that, are we ready to scale?
Yeah.
No. Because essentially, let me walk you through qualitatively. What we've proven is that if we acquire 10 more customers next month, they are going to be successful on our product. Most of them, maybe all of them. That's what we've proven. So why can't we scale yet?
I don't know.
As a business, we need to make sure we're profitable. We haven't proven that yet.
Oh.
Before we scale, we have to make sure we do this profitably. Because up until this point, I don't know if that's the case. I don't know if every time I acquire a customer, I lose $100.
But don't I hear so many companies that are just like scaling before they find profitability?
Sure. So first off, we have to differentiate between GAAP accounting profitability and the profitability I'm talking about, which we're going to isolate it to the scale of revenue, which we usually talk about in terms of unit economics. Okay, so GAAP accounting profitability, that talks about your overall revenue minus your overall costs. Not just your sales team, but like your office, the cost of your CEO, or your IT infrastructure, some of which is not going to scale as you bring in more customers and revenue. So we have to make sure we isolate that measurement of profitability for this evaluation to the scale of revenue and customers. And that's where we talk about unit economics. So in basic economics, it's like marginal revenue minus marginal cost is a profit. Okay. In a lot of the software businesses we look at, you could talk about lifetime value to CAC ratios being greater than 3. You can talk about payback periods being less than 12 months. So when I acquire a customer, how many months does it take for me to recoup that investment? These are measures of unit economics. So I need to prove not just that I can make these customers successful, but that I can acquire them in a profitable manner. Okay. And so we call that go-to-market fit. So we have to do go-to-market fit after product market fit because we don't want to optimize the go-to-market on the wrong product market combination. So once we establish our math, we can just measure that every day, every week, every month, we're performing above that number, and that will guarantee that we have good unit economics, and now we have go-to-market fit. Now we are ready to scale. The right answer to when are we ready to scale is you have product market fit as measured by in the long-term retention, in the short-term, the lead indicator retention, and then you tackle go-to-market fit, which is measured by unit economics in the long term, and as the algebra leading indicators to unit economics in the short term. That is an A+ answer to when you're ready to scale. So to recap, don't fall into that trap. Don't fall into that trap of like, okay, we have 5 customers now. Okay, we have $100,000 in revenue. That's market message fit. You are not ready to scale. Just because someone gave you a seed check, it doesn't mean you should hire 10 salespeople tomorrow and get ready to scale. The foundation has to be there. It might take you a week. It might take you a year. I'm not asking you to go slower. I'm asking you to go really, really fast and hard at the right stuff and the right North Star. And this framework allows you to be able to do that. So point number 1, establish product market fit as measured by customer retention and framed by the leading indicator of retention. P% of customer to E event every T time. Step number 2, go after go-to-market fit. That has to be sequential. It's measured by unit economics, and using basic algebra, you can extract that unit economic target back to inputs like meetings, conversion rates on meetings, ACV, etc. The choice of when to scale is such a common failure point for startups. Completely unnecessary. Great ideas that go sour because of this simple miscalculation. I hope this allows you to get out of the noise, out of all the voices and the qualitative directions to a framework that allows you to use your data to decide when you're ready to scale. I'm Mark Roberge. I'll see you on the next episode.